right, first up today on the show, we're going to put the spotlight on early stage Accelerator funds, 100 Unicorns, who were formerly 9 Unicorns. They've launched their second fund with a target of raising $200 million, which includes a greenshoe option as well of a further $100 million. Dr. Apoorva Ranjan Sharma is the MD and co-founder at 100 Unicorns and now joins in on the show. Thanks so much for taking time out. I want to get in a sense as to what exactly it is that you plan to do with this fund in terms of 200 startups, I understand, across various sectors. Which are some of the sectors that you will be focusing on?
So this is purely an accelerator VC. This is a type of fund which is, very different from other funds. In the US, if you recently seen the, Ms. Khosla's comment, that 70% VCs don't add value, even in the US. But there are about 200 accelerator VCs who add a lot of value. This is, this is a kind of fund which is like Y Combinator of US, and we call it 100 Unicorns. Target corpus is 200 million. Of course, we will be investing from here about 200 good ideas. And the idea is to not just invest, but also give them support of 3 rounds of financing, mentorship, and also value preservation support in terms of governance checking and also business mutuality. So this is the way how we develop companies in the fund one also. We have developed around 145 companies, out of which some of the best companies have come out, like Blue Smart, companies like VideoVerse, companies like Zip Electric, companies like Exodus Global. Many good companies have come out of that. So this is an accelerator VC fund targeting 200 new ideas.
So what is going to be the initial check size? How much will it go up to?
In the idea stage, normally the check size varies from $250,000 to $500,000. And then, within 6 months, the next round is built with the best of the companies, mostly around 60-70% company qualify for that. Support available for the future rounds, next round and next round also. So the support is available for the 3 rounds.
Right, and I understand you've deployed about 75% of the fund with investments in over 145 companies. Give us some examples. I know you did touch upon it in the beginning, but if you could elaborate a little bit more on the companies that you're looking at and that you have looked at.
Yeah, for example, Zip Electric, which is now the largest EV scooter company. I mean, they are into, Zomato is one of the biggest clients. You can see the green scooters in Delhi whenever you're going to, the delivery boys are using. So there are about 20,000 scooters. We were the one of the first investors in them. You can see the blue cabs, electric cabs in the Delhi market and even in the Bangalore. We were the first investors in them. You can see the highlights of IPL. Around 400 sports channels are using the algorithm of VideoVerse to get the real-time highlights. This is VideoVerse, which is now, last round was at 500 million. It's one of the first, we get the first check. So when we develop these companies, in the idea stage, there are a lot of challenges. And especially when they're companies like they're coming from the smaller cities, like, for example, My Fitness, which is the peanut butter company, came from Silvassa. A lot of challenges in the idea stage. So there is a lot of mentorship required at that stage. Apart from the mentorship, they also need support for help, multiple round fundraise. So we have product like Demo Day, where the next round VCs come to invest in them. Between the first four demo days, companies have raised close to $470 million for the Series A. And then we do organize Pro Star, which is for the larger rounds, $25 million plus check. So these kind of supports are available for every startup which we are developing. And then for the governance check, we have governance workshops with Nishin Desai. And then we have business model leakage checks with Avalon. So those kind of services are available for every startup which we invest. So our focus is to build, not to just invest. And that's the reason why we have less than 5% mortality. And we have a very good hit ratio as of now. The there are about 30 plus companies which are $50 million plus, and there are about 7 companies above $200 million. And in the growth stage company which we invested, there are about 11 companies which are $200 million plus. So, the portfolio mix is very good for the previous fund. And companies like Rani Cosmetic, which are coming from Ahmedabad, which also companies like IGP.com, they all, we get them first check, and they are now above $200 million companies. So this is the kind of portfolio we have access, and we get access from a lot of startups from, tier 2, tier 3 city, which, we get started from 400 plus districts, uh, you know, and that is one of the strengths. In the fund one, we got on 14,000 applications, and we invest only in 145, less than 1%. So, the access to deal is very, very good, and access to, some of the best talent of India to develop them is also there. So this is Accelerator VC, which is entering into Fund 2 now. The purpose of setting up this fund is to create high quality startups and give them the one of the best check and best enablement for the first round, for their idea stage.
Right, and I understand you've deployed about 75% of the fund with investments in over 145 companies. Give us some examples. I know you did touch upon it in the beginning, but if you could elaborate a little bit more on the companies that you're looking at and that you have looked at.
Yeah, around 15% companies, even 16% of them, even today in the fund one, we have deployed outside. But in the next fund, we have sector focus and also the global focus coming. We are having partners like we have feeder funds coming in ADGM. Feeder fund is already there in Singapore. We will be getting, we are also getting partners locally to get the access of some of the best local. Like for example, in Africa, you've got 77,000 startups. So we're getting partners who can get us access some of the best startups from there. So the idea is to expand outside India. Maybe 20% India, 20% start investment will be outside India. Still the 80%, 80% will be in India. But we have kept some capital for outside India to attract global startups to India.
So what's the outlook in terms of the vision for 100 unicorns? What's the long-term game plan?
See, this is a type of VC which basically the need of the market. Like today in India, we are sitting at 150,000 startups. The startup ecosystem is growing almost at 40 to 50,000 startups a year. In next 7 to 10 years, you will be a million startups. Who will give them the first check? There will be many. Today you are at 1,500 VCs, domestic VCs, and maybe 3,000 plus global VCs investing in India. Globally, there are 42,000 startups, 42,000 venture capital funds, and out of which maybe 15,000 operating from China, 20,000 from US, right? India will also become maybe a 10,000 domestic VC fund market. But who will give them the high quality startups? Who will give them, because their return also depends upon whether they are getting the high quality startups or not. In the US, there are about 200 accelerator VCs who are creating, so the hit ratio is like top 10 accelerators VCs in the US. They have produced close to 17% unicorns. So that means around 170 unicorns out of 1,000 has come out of these accelerator VCs. So that role is being played by the accelerator VCs in the US. And that is why there is a need in India for the accelerator VCs, which is where the 100 unicorn is placed. The vision behind our inspiration and aspiration is to become VC of India. In the first fund, we have tried to prove that. And in the second fund, it will be a continuation of that with some improvisation, of course. We have done the sector approach where we are getting some of the Soonicorn founders and some of the industry partners to develop companies with us, and then global partners to help us open doors in the global markets for these startups. So these improvisations coming, but the cool thing is, I'll say the inspiration and aspiration remains YC in the US because they have done amazing. They have created a portfolio of $600 billion in the US with 4,500 investments and close to 91 unicorns they have, right? So collectively, these 200 accelerators, they would have not done more than 1 lakh investments in the US out of, I'll say 12 lakh to 15 lakh startups there, right? But, the impact is huge. The reason why it's a developmental approach of these VCs, and that is what we have already developed as a building block in the previous fund. And the result of that is quite visible. And if we continue to do, in the next 7 years, we will have demonstrable results. I'll say amazing results coming out of this 100 unicorns. So the vision behind 100 unicorns is to create, in the 10 years, 100 unicorn companies and, give high quality startups to venture capital funds in India and globally.
Right, and finally, you've spoken about how India is going to emerge as the startup nation in the next 10 years. Give us a sense as to how you see this happening and what the startup ecosystem could potentially look like.
India is actually a very different market, unlike US. US is more concentrated economy, Bay Area and New York area. But, similarly, China. India is already processing startups from 600 plus districts. I mean, that's a Startup India report, right? So there is a lot of startups coming from tier 2, tier 3, tier 5. In our portfolio, it is like Wild Fitness come from Silvassa. The IGPS come from Lucknow and Pune. The companies like Acidus has also come from a smaller city. One of the biggest success OYO has come from smaller city, Raigada. So these companies from smaller cities, if any VC funds in India have to have access of that. Through us, it's a possibility of getting that. So my outlook to India is simple, that, India will produce around 30 plus startup cities and they will have, concentration of some of the best startups. And you can get startup, today you're getting startups from 600 plus districts. So India will become a million startup economy in the next 7 to 10 years time. And you will have at least 1,000 unicorns here and around 3,000 Soonicorns, and fair chances of having around 10,000 VCs, domestic VCs. The rate at which the VC ecosystem is going, the rate at which the startup ecosystem is growing is amazing. And the reason behind this, the good hit ratio. You just produce 115 unicorns out of first 50,000 startups. Whereas China has 300 unicorns, I'll say. They have already 12 lakh startups, right? The hit ratio in Indian startups, even in the US, we have around 100 unicorns done by Indians, right? So the Indian entrepreneurs, the hit ratio is really good. We want to, of course, piggyback on that being present in India, we want to take advantage of that also. And because of our presence in 400 plus districts of our parent company, Venture Catalyst, which is present in 400 plus districts, we get access to some of the best startups. So that gives us an advantage, of course. So that is also there. So my vision for this Indian ecosystem is going to be one of the fastest growing startup ecosystem in the world.
All right, good to have you on board. Thanks so much for joining in.
If you like this video, then like, share and subscribe to ET Now.